price action. So today we had FOMC. This is all in the 1 minute chart, by the way. We had the New York lunch high right at 2 o'clock. We took out New York lunch high and this other short-term high right here. Then we start dropping, and I was kind of usually on FOMC the opposite happens. So if it goes up, it'll usually start to come down, and look what we did. We initially went up, then it came down. So I initially saw this right here. Right? And if you watch my last recap, I'll turn my executions on actually. I took a trade right here. So we came down, formed this sell side imbalance, buy side inefficiency. Once this candle opened, it traded up. I got a pretty bad fill because I just pressed sell as market order. I didn't have time for a limit order. I kind of got a bad fill, but you can see how we tapped into this SIBI. What the low was 22,021, and the high of this candle, which is going to be up here, 22.25. So it went up a point, so 5 ticks. It went up into this 5 ticks and then immediately rejected. And I exited right here because we are in the new day, or not the new day opening gap, I mean the opening range gap. From, if you come down here, bottom right, regular trading hours, toggle that. Not electronic, you want regular trading hours. You toggle that. You take the closing price yesterday at 16.14 at 4.14, the closing price, to the opening price here at 9:30. That is your opening range gap. I have an indicator that does it for me, so I don't have to worry about it every day. But this, as you can see, we sold off in the morning. When we usually gap down, I'm usually bullish for the AM session because the market's going to want to draw back into that gap. So we opened here 9:30, we tanked. There is a 70% chance that the market will go to consequent encroachment of the new opening range gap. Now people are going to take that the wrong way and be like, oh my god, this is a 70% chance of if I just go long at the open. No. You have to look for signatures in the market that tell you that I can go long here and target the consequent encroachment of the opening range gap or the midpoint. So you had a big rally. Then we kind of chopped around. I didn't trade any of this today. I was gonna wait till FOMC, which I did. Took out New York lunch high. Came down. This opening range gap is good for the whole day. As you can see, we bounced off of it here. We almost bounced off of it here. Right? So we came down. We came back into this SIBI. It tapped into it. Whenever you're gonna enter off a SIBI or a fair value gap, you wanna set your limit order if you have time. Sometimes it moves too quick. At the very high of the third candle, this candle right here. You want to put your limit order right at that high, plus 1 tick for spread. Because more times than not, the more you watch price action, you can realize and you see, when you know what you're looking for, that this will stay unopened. Or stay unfilled, excuse me. We came into it right here. It was 5 ticks into here, and then we dropped 33 points. This candle is 33 points in 1 minute. That's $600 and some with one contract of the NQ. So there's my first trade. Targeting here. Yeah, we could have came down here, but that's a little unrealistic. If you had more than one contract, as soon as you took your partial here, you move your stop to break even, and you would have gotten break even right here. But like I said in my last video, if you guys watched it, the first half of this fair value gap is the most sensitive part. So you don't want to see price come back into this upper half of this sell side imbalance, buy side inefficiency. Because if it does, there's reason to believe that we could potentially move higher. It can hit that and it can wick out of it. But as long as we don't close above it, it's still valid. And whenever you're in a trade, you do not want to see it go above consequent encroachment, which is the midpoint of the fair value gap. Whenever I'm in a trade and it does that, I look to possibly shorten my stop to preserve capital, or I watch how the bodies react. Because we can wick out of it, but as long as the bodies are respecting the midpoint, it's still valid. And then I sold here. I was watching price action again. It got choppy. Then I saw that we came back in right here when we took out these relatively equal highs right here. And then the next candle, we closed inside of it. Next candle opened and we came down. So this told me that, okay, we're probably not going to come back up into this, and we're probably going to seek this low, because this low wasn't here yet, because we're right here. This low, potentially this low. So I waited for a fair value gap to form. Right here. We get another SIBI. See how price didn't fill in this whole SIBI? And I got nearly perfect entry on this. You can see, like, my cursor is blocking it, but you can see at the top of that candle where the little arrow is. Nearly perfect entry. It might have been a perfect entry, actually. Sold short right here. Targeting consequent encroachment of this, which we didn't hit. Now, this is going to get a little complicated, but I always measure wicks. Wicks, I want you to treat wicks like fair value gaps. Like a gap, like a volume imbalance, or a fair value gap. It's pretty much the same thing, right? So, just like I was explaining to you with the fair value gap, since we did not come below the midpoint of this wick, price is not as weak as I thought it was going to be. So that's why I sold. It came down here, wicked. I saw it not come to the midpoint, and I just took it off to secure my profits. And look what it did. We had a huge rally up. We even inversed this SIBI. So there's my second trade. On the way up, we created this BISI, this buy side, buy side imbalance, sell side inefficiency. Now you can see we kind of chopped around, and it did leave a little sliver of it open. Let me zoom in. Little sliver right here open. That's good. It means there's still about 3 ticks of this, which is still classified as an imbalance. So if you entered here, right at the top of this candle, because that's where you want to enter when you're bullish, and you want to enter at the bottom when you're bearish. We came down, you would have had almost about 4 or 10 points of drawdown, 7 or 8 points drawdown. And then we rallied, creating this BISI. And initially, since we did close above this SIBI, I was like, okay, we're probably going to take out New York PM high. And then I was just waiting. And then I saw this big ass down close candle. 46-point candle right here. That came down. Notice how the bodies are respecting the midpoint of this fair value gap. See how it wicks down? It can do that, right? But look at the bodies. They're closing above the midpoint. That's bullish. That's just the market coloring outside the lines, you know. So it wicked down. The wick is what does the damage, right? The real thing that matters are the bodies. So we closed above the midpoint on this BISI and again right here. So we rallied back up. We took out this short-term high. Okay, and I'll go over why I went short right here. So remember what I said about wicks? I treat them as gaps, right? So I started measuring these wicks right here. We didn't get to the midpoint here, so we must be pretty weak. Let's check out this other wick here. We didn't even get to the midpoint of this shorter wick. That means the fact that we didn't get to the midpoint of this wick or this the bigger wick right here means we're probably going to retrace. So I waited to see what happened. We had a big down close candle. These 3 candles closed down. Created this BISI, right? Where'd I enter at? Entered. Ideally, you enter at the bottom, like I said, because it could just do one of these things, comes up and then just sells off immediately. Ideal entry would be right at this candle's high. But I was kind of skeptical because it is FOMC. So I waited and pretty much came up to this. Let's see if it's actually 22,040 is the midpoint of this fair value gap. The high of this candle up here, 22,040. Perfect to the tick. Came up to the midpoint, huge sell-off. So whenever you're in a trade and you're using fair value gaps to enter off of, or if you're in a position and you're holding for a while and you see a fair value gap form and you might reverse and you don't know which way it's going to go, watch how it reacts to the midpoint or to the first quadrant. So if you go measure out your fair value gap, you put on the third quadrant and the second quadrant. Watch how it reacts to this first half, the first quadrant and the midpoint. And if it respects it, you can say with high certainty that will probably go in the direction of your trade. So I entered here, I sold here. Why? I didn't want to hold. I'm on a live account, as you can see in the bottom. This is real money. I was targeting the midpoint of this wick. I was thinking, oh, we might not hit the midpoint of this wick and then reverse. I entered right at the midpoint of this, or exited right at the midpoint of this wick. I was happy with that. That's like, whenever I would rule when I'm trading with real money that if I see 20 points, I exit the trade. You can't go broke 20 points a day trading one contract of the NASDAQ, one NQ, $400 a day. You can't go broke doing that. If you can consistently get 20 points a day, then you can be consistently profitable. It's as simple as that. You don't need to be getting these 50 point, 60 point, 100 point runs. As long as you can consistently do 20 points every single day, then there's no reason you should be needing to get a real job and work your ass off 9 to 5. So I exited right at the midpoint of that wick. We came down to this BISI. I saw this candle react, and I was kind of thinking we were going to go long again. But I had 3 winning trades, and I made plenty off of that. I just didn't want to risk any more. But we ended up selling off quite a bit. We took out New York AM lows and the Asia low from this morning. So once that happened, I initially thought we were going to come back down in this new week opening gap. So I was kind of looking for shorts to maybe get another scalp in. But we didn't get there, and we reversed. And I did take one more trade on the combine. It was a long entry because I was watching I can't. Okay, here's the combine. I was on the 15-second chart, right? Because I was flipping between these charts. I was like, okay, we took New York PM low right at 3 o'clock, right here. And I was initially thinking, okay, this is 15-second chart, by the way. I will maximize this. So I was initially thinking we're going to get down to this new week opening gap, right? So I can at least get maybe another 20 points. So I saw this form, this SIBI, and I didn't enter short because we didn't take out this low. So I was like, okay, we're going to rebalance probably. And then I also measured this wick. Oops. So we got the consequent encroachment of the wick, right? So we got to the midpoint, and we sold off. And we took out this low. And then we started chopping around. And then I saw us take this candle right here. I was watching this candle form. I wish I had it live because I was really, the gears were turning. So I measured this wick. And I said to myself, if we can't even get to the midpoint or consequent encroachment of this wick, but we got to the midpoint on this wick right here, we might be reversing. So I waited to see if we would come back down, maybe even go below it, because if we went below it, then I would look for a bearish fair value gap to go short on into the new week opening gap right here. But we didn't. We never came down to the midpoint of this wick, and we reversed. And I was watching this wick as well. We got above it. So this told me, okay, we're bullish. We're going to reverse right here. So we came up. We had this volume imbalance right here. I initially wanted to enter on this volume imbalance. But we came down. I didn't have a limit order in. I was just gonna market buy. But it came down, but it was way too quick. I couldn't, so I had to wait for a better entry. I entered. Let's turn the executions on. Right here. 2 NQ right at 9:20:25. Why? Because we had a imbalance right here. I entered right here on this. I took a short here too. But this is the real meat of the trade I alerted. You also had this wick, came down, touched it perfectly. You think that's a coincidence? You think that's buying and selling pressure? No. So I entered here. Took one off above this high. And then we got the rally, took another one off. And then lo and behold, we're rallying. So entry was right here. No drawdown except for here. But I was already out of the trade. From here, 21, I was in at 20:25. So just call it 20, 21, 920 to, that's 50 points. In, let's see, 1, 2, 3 minutes. This is a 15-second chart. And it would have ran even higher. So that's it pretty much for this recap. It's kind of been long. I kind of start seeing things on the charts and I start explaining them. And some of you guys might be lost, but I'm here to help and teach you guys. If any questions, you can DM me or just ask in chat. So I'll see you guys for training tomorrow.